Hello guys, and welcome to this video tutorial. In this video tutorial, I'll be showing you one of the most profitable forex strategies you'll ever encounter in forex. This is not price action, this is not market makers, this is pure indicators, filters. So before that, let's set up our chart and let's make it look a little better, and let's go to properties, or you can just simply press F8. Then the background will be white, our foreground red. The grid will blend the grid color to the background white color. The bar up will give it green, the bar down will give it red, the bull candle will give it a green color, and then the bear candle will give it a red color. So you can see everything is now customized and ready to begin. So the first indicators we need to add up here is the MACD value. And your MACD value, take note of your MACD value. Your MACD value is 30.72. 30.72. That is your fast moving average is 30, the slow moving average is 70, and then the MACD value is 2. Add it. So basically what this signifies is when the MACD value is above 0 point, the market is going to go upward. And then if the MACD value is below 0 point, the market is going to slope downward. Then the next indicators we'll be adding is the moving average. We'll go to trend. We'll add the first moving average, which is 60 moving average. The method, it's simple, apply to close, and we'll give it the color of green. Then the next moving average we'll be adding is the 20 moving average. This time around, the color will be red. You can see. Then the last but not the least indicator we'll be adding is the trend indicator, the Ichimoku Kinko Hill. We'll add it up. You can see the Tenkin 9, Kinjun 26, and Sinko is 52. This is it. For as much of you guys that the Ichimoku value will be with lots of other colors, all what you need to do is double click on this and go to colors. Your think and send value, you set it to your background, which is white. Your Kinjun send, you send it to white. Your Chikao, you send it to white. And then the only colors that will be available that can be visible is the sandy brown, which is the up Kumo, and then the distal, which is the down Kumo. You can see. So I'll be explaining first of all the Ichimoku. Now, when you take a look at this, from this your present candlestick formation, this green little candlestick formation, where the price is at right now, to the tip of your Ichimoku, you have 26 bars. You can see 26 bars there highlighted. That's after your price value, that's 1.18517. The next you have 26 bars. Now you always find out that, okay, the tip of your Ichimoku is always 26 bars ahead of your candle's price. Ahead of your candle price, which means Ichimoku is always ahead of your candle. What does that insinuate? That Ichimoku will change. When Ichimoku changes, know that the market trend in the market price in the market is about to change. It's about to change. Good. With that being said, with further explanation, let's Control F, and then from here, whereby from an little uptrend where we see the market trend changes, from here, let's measure the 26 candle bars. 26 candle bars, you can see, good. 26 candle bars at this point. So at this point here, Ichimoku has changed here, and then the price is at this point, telling us the market is going to be on a downtrend. And then we're selling. Then you sell. But then before you come, like, there's going to be a little bit drawdown, about 34 pips. Then the market comes down on to 110 pips. Same thing happens here. Measure our 26 bars before the market changes. You can see it here. So the market price, we at this point when our Ichimoku changes, telling us that it's going to be a downtrend. So from this point, we're selling in the market. We're selling in the market. And then same thing happens here, same thing over and over again. And then so with that being said, now when the MACD value is above know that it's going to be above the 0 point, the market is going to be on a buy, and then if the MACD value is below 0 point, the market is going to be on a sell. Then if your 60 moving average is less than your 20 moving average, the market is going to be on an uptrend. And then if your 60 moving average is greater than the 20 moving average, the market is going to be on a downtrend. So how do you incorporate all these three indicators into one? First of all, you look at your Ichimoku value, you look at your MACD value. Immediately your MACD crosses the 0 point mark downwards. Look at your moving averages. You can see the moving averages, and then from where you are, measure your Ichimoku value, 26 bar. You can see the market is on the downtrend, so we sell 84 pips. Same thing happens here. You can see your MACD values above, your moving averages 60 is below the 20, and then your Ichimoku value is upward. You buy. As simple as that. So thank you guys once again for watching my video. Don't forget to like and subscribe and leave a positive or whatever comment that you would like to leave there. Thank you guys.